My name is Chikazi Bashwa. I am a business planning expert. You are welcome to Business Mind Space. If you are here to learn how to plan and structure your business in the simplest terms, then you are in the right place. Today, I will be introducing you to business planning, what a business plan is, the types of business plans we have, and the components of a business plan. Sit tight and let's get started. A business plan is a detailed document that outlines the goals, strategies, and the business roadmap of a business. Let's look at the importance of a business plan to business owners. Number one, it provides clarity and purpose. In a business plan, you will define your vision, your mission statement, and your objectives. You definitely need a business plan when you're seeking funding, either from investors, banks, or other financial institutions. Your business plan guides your decision making process. It helps you with financial planning and serves as a roadmap for your growth. So, your business plan is a living document and you need to update it regularly, at least quarterly. The first chapter of a business plan is the executive summary.
So let's look at what the executive summary entails. The executive summary is the first chapter you see when you open a business plan. However, it is the last chapter that you write. So it summarizes the entire business plan.
After the executive summary comes the company description. Under the company description comes the status of the company, if it is a sole proprietorship, a limited liability company, or a partnership business. Under this chapter, you have your vision, your mission statement, your core values, your unique selling proposition, and of course, the founder's profile. Some people make this optional. However, it is important to know or to have a brief background of the founder of the company.
So let me go over this again. Your company, under your company description, you have the status of the organization. That means you need to specify if it's a sole proprietorship business, a limited liability business, or a partnership business. So you need to state that clearly under the company description and when the company was registered. After that, you need to write out the vision of the organization. State what the vision is clearly, write your mission statement, and then you write your core values. What will your company go by? What are you going to be known by? Write your core values, write your unique selling proposition, that thing that you know that you do well. Write it, write your unique selling proposition and the founder's bio. Remember, this part is optional. Once we're done with the company description, we move to the industry outlook or industry analysis. And here you need to be armed with statistics. You need to know what's happening globally in your sector. So you need to do a little bit of research under this chapter so that you can state exactly what is happening in your sector. And then you need to also state what is happening in your continent and in your country under this chapter. So you go to um, you go to websites like statistica.com, they have statistics of so many things. And so you can quote statistics from there, as well as other websites like Euromonitor. Just go do your research and then state what use statistics to show that you know what is happening in your industry. After this, you need to look at your business drivers. Why is your type of business thriving? Why is your type of business thriving? So you need to look at these factors and state them. Then you state you state them, and after that, you then look at your pestle analysis. I say it again, you need to evaluate your pestle analysis. What is pestle? Pestle is political, economic, social, technology, legal, and environmental factors. So you need to look at how these factors affect your business. How is the political stability of your company going to affect your business? You need to state it, put it in a table, so you can state it clearly. So anyone that is reading your business plan can see it side by side. These are the political factors. These are the economic factors. These are the social factors. And then when we're done with the industry analysis, we look at the marketing plan. How do you want to market your product? So the first thing is you need to look at the barrier for entry for your industry. How easy is it for people to come into your industry? When you're done with that, you then state who your target customers are. Who are you marketing to? Who do you want to buy your product? Then you also state your brand positioning. How are you positioning your business? Are you positioning as a wellness brand, or do you want to be known as an ethical fashion brand? Whatever you want them to know you as, you need to, under the marketing plan, write your brand positioning statement. What are the benefits of your product to your target customers? You need to state it there. And then when you're done with that, you look at your marketing strategy. How will you market your products offline as well as digital? So when you're done writing out your offline and your digital strategies, how will you now distribute this product? What are your distribution channels? So you need to state it, and then you look at your pricing. What kind of pricing model are you adopting? Is it the cost plus margin? After this, we will move to the next chapter, which is the SWOT. SWOT means strength, weaknesses, opportunities, and threats. Note that strength are the things you do so well. Weaknesses are gaps in your business, and both of them are internal. They are things you can control. Opportunities are the things you want to see in the nearest future in your business, probably within your sector. For example, if you make coconut oil, you may want to start coconut flour in the future because probably there is a need for it. So, opportunities are like the milestones you can achieve, the things you want to see in the future. Then we look at the threats. Those are the things that can kill your business, like government policies, economic cash crunch, lack of infrastructure. Things like that can kill your business. And these two are external. You cannot control them. I mean, no, we cannot control fiscal policies and infrastructural changes or lack of it. So, We just have to look for a way to cushion the effect. For example, currency fluctuation has the ability to increase the price of your product as a result of a direct influence on the price of raw materials. So, what do you do at that point? You need to look for ways to cushion the effect. And one of those ways could be to export to other countries, to countries that have higher purchasing power. So, this is what the acronym SWAT is all about. Ideally, it's good to put them in a table. We then move to competitive analysis. This is where we analyze our competitors. And I recommend that under the competitive analysis, you analyze three competitors. So you could analyze them based on certain parameters. Parameters like pricing, like branding, technology, like location, product variety. There are so many parameters to look at when you are analyzing your competitors. So, you need to look at your standpoints from the competitors. Is there something they are doing better than you? You need to put it there. Is there something you are doing better than? You need to be armed with that information. Under this chapter, you also highlight your own competitive advantage. What is it that you do so well that others do not do? This is where you write it down. What sets you apart from other people? You put it down under the competitive advantage. Then we move to business operations. What do you need for your day-to-day running of the business? Licensing and permits, equipment, SOPs, resources, what assets do you have? This is where you write all that down. Where is your location, your production facility? What kind of production facility do you use at the moment? What kind of quality control measures do you have in place? These are the things you need to write. Your suppliers, other resources like your bookkeeping, intellectual property. This is where you list them. Do you need a trademark? You write it there. Have you acquired one? What kind of raw materials do you need? After that, we move to human strategy. And here you need to state the people managing the business, the directors of the business, the advisory board, what kind of qualifications they have. You need to state that under this chapter. When you are done writing these down, then you need to look at your recruitment plan. What resources do you need? You need to look at what vacancies you have open, what positions you have filled, how you're going to fill these positions, what qualifications you are looking for, what the job description is all about, what the compensation is, what their bonuses are. All these fall under the recruitment plan. So when you're writing, for example, if you need a COO, you put under the COO position qualifications you desire, qualifications preferred, job description of the person, what the salary will be, what the person is entitled to, and who the person reports to. This is to ensure that whoever is reading the business plan knows exactly what the management wants in terms of human resource. The person knows This is the position of the business. These are the positions that are open. These are the positions that are occupied. And this is what they have structured the compensation and bonuses to be. You then draw an organogram or an organizational chart. The organizational chart shows the structure of the business, the reporting line. Once this is done, we then move to the financial plan. The financial plan has three major parts, which is the profit and loss, the balance sheet, and the cash flow. One of the benefits of making a financial plan is that it helps you calculate how much you need to run the business. It also helps you project for the future. This way, you know when you're going to break even and when you will be profitable. This also helps with financial accountability and discipline. So, we will be looking at these three major worksheets, which are the profit and loss statement, the cash flow, and the balance sheet. And I'll be showing you what each of them look like. I'll suggest that you have an accountant beside you when you are doing this if you're not very good with mathematics or accounting. Now, let's look at the profit and loss statement. Here, you see the revenue made, and then the cost of production is deducted from the revenue to make the gross profit. There is also a list of operational costs. The total operational costs are deducted from the gross profit, which then gives the net profit. After depreciation and tax are deducted, you then have the final profit or loss. Then we move to the cash flow statement. This sheet shows how cash moves within the organization, either from operating activities, investing activities, or financing activities. Then the final one is the balance sheet. Here, your total assets and your total liabilities have to be the same. Eventually, they have to balance out. We will do a deep dive on this sheet in a later episode.
So let's have a recap. We looked at the executive summary, company description, industry analysis, marketing plan, SWAT, competition analysis, business operations, human strategy, and financial plan. I really hope you got value, and if you did, don't forget to click the subscribe button on the right and turn on the bell notification so that you will get an alert when I upload the next video. Until I come your way again next week, keep building that business.